While the world relaxes into its weekend, the most dangerous moment in modern financial history is lining up to begin tomorrow night. We're calling it Black Sunday, the moment global futures markets reopen in Asia at 6 p.m. Eastern. When that bell rings, a shockwave from China's $688 billion liquidity exit will hit the system with tsunami force. Traders are already bracing for a limit-down open in the S&P 500 and a violent, limit-up surge in silver. The calm you feel right now is an illusion. The storm has already formed. By Monday morning, the financial landscape may be unrecognizable. This isn't speculation. It isn't fear-mongering. It's math. Markets don't sleep. The real damage happens overnight in the dark pools of Tokyo, London, and Hong Kong. This Sunday carries the highest risk of a catastrophic gap-down open since 2008. A gap-down doesn't give you time to react. The market opens 10% lower than Friday's close. No selling, no hedging. You wake up and the damage is already done. The algorithms that dominate modern markets are programmed for one thing: sell first, ask questions later. When volatility spikes, they don't hesitate. When Asia opens, selling will be fast, blind, and brutal. For 2 decades, Chinese capital acted as the hidden floor beneath U.S. asset prices. That support is gone. China's liquidation of U.S. debt has pulled the rug out from under the stock market, leaving behind a liquidity vacuum. When markets search for buyers Sunday night, they may find none. This is how crashes really happen. Not because everyone sells, but because nobody buys. The exit of the world's second-largest economy from the dollar system is the catalyst. If you're holding stocks or bonds over this weekend, you're exposed to an existential risk. Losses on Black Sunday could erase 5 years of gains in minutes. Pension funds are already fragile. A 20% market drop would force mass liquidations at fire sale prices, triggering a self-reinforcing death spiral. Retirement systems are sitting on a fault line, and the earthquake is scheduled. Normally, the U.S. government deploys the Plunge Protection Team to stabilize markets. This time, they're out of ammunition. They can print fast enough to counter the selling pressure coming from China and the broader BRICS bloc. Support will be attempted, but it will be overwhelmed. The safety net is torn. As stocks fall, silver is positioned to explode. Capital-fleeing paper assets will rush into hard assets. We expect a historic God candle in silver, a vertical move that could push prices past $100 in minutes. This isn't wealth destruction, it's wealth transfer. A Sunday night crash almost guarantees a bank panic by Monday morning. When portfolios implode, people run for cash, but the banks don't have it. Withdrawal limits and banking holidays become inevitable. Financial crisis and banking crisis are inseparable. When one collapses, the other follows. Crypto, trading 24/7, will react first. Expect a violent flush as traders liquidate Bitcoin and altcoins to meet margin calls elsewhere. The shock will be severe, but unlike stocks, crypto may rebound as capital searches for non-sovereign assets. Notice the silence from the media. No warnings, no urgency. That silence is intentional. If they told the truth, everyone would rush for the exits. Instead, retail investors are being kept inside while elites quietly position themselves. History rhymes. 1929 collapsed on a Monday, so did 1987. Fear builds over weekends. By Sunday night, psychology snaps. The bond market is the true trigger. As China sells, yields spike. When yields rise, stock valuations mathematically collapse. If the 10-year Treasury breaks 5%, S&P 500 valuations justify a 30% drop, mechanically, not emotionally. Circuit breakers won't save the market. They only pause the fall. A halt is not protection, it's confinement. This isn't an accident, it's a wealth transfer. The elite are short. When markets crash, they buy everything back: stocks, homes, businesses, for pennies. Black Sunday is their shopping spree. The era of buy the dip is over. Inflation has tied the Fed's hands. There is no Fed put this time. The dip won't bounce, it will cascade. Markets are now run by machines. When volatility spikes, AI sells relentlessly. There's no mercy in code. Add geopolitical risk, Middle East conflict, Taiwan, Hormuz, and fear premiums will crush risk assets even faster. If you're heavily exposed, hedge or reduce risk. If you're sitting in cash, move toward real assets. This weekend isn't about profits, it's about survival. When Monday comes, headlines will scream crisis, banks will wobble, trillions in value will vanish. You'll be glad you prepared. For years, the market rested on just a handful of mega-cap tech giants. On Black Sunday, those generals fall first. Liquidity droughts hit overvalued tech hardest. Margin debt will turn weakness into collapse as forced selling feeds on itself. This shock won't stop at stocks. Housing follows confidence, and confidence is fragile. Deals freeze. Luxury real estate locks up. The wealth effect reverses. Normally, crises drive capital into the dollar. This time, the dollar itself is the problem. Stocks and the dollar could fall together, a stagflationary nightmare. Corporate buybacks, the hidden support beam of the bull market, are ending. Higher rates and slowing growth remove the last artificial floor. Real valuations are far lower than current prices. Volatility has been suppressed for years. When it snaps, VIX could spike to 50 or 60, forcing massive risk parity funds to dump stocks automatically. Billions more in sell pressure. No discretion, no delay. For a generation taught that markets only go up, this will be traumatic. Faith in the system will break. Many will exit forever, locking in a long-term bear market. Pensions will not recover. A single 20% hit permanently destabilizes systems that need steady returns. Benefits will be cut. This crash steals from the future. In every major crisis, one asset shines. In the 1970s, it was gold. After 2008, gold again. In 2026, it's silver. It's historically undervalued, and even a small rotation of capital could send it parabolic. Black Sunday isn't the end of the world, it's the end of the illusion. Math is reclaiming control from fantasy. Liquidity is gone, and without liquidity, markets cannot survive. If you're seeing this now, you still have hours. Hedge risk, hold real assets, watch silver. History is about to turn the page. Prepare for impact.